Before we dive deeper into credit strategies and management, let's take a moment to answer one simple question. Why does credit matter? For many people, credit is just a score, a number they check when applying for a loan or a credit card. But in reality, credit is much more than that. It's a key part of your financial identity. It determines not only what you can afford, but when and how you can achieve your goals. Understanding why credit matters helps you see it for what it truly is. A financial foundation that affects every area of your life. From buying a home to landing a job to building lasting wealth. Let's explore how credit quietly but powerfully shapes your financial future every single day. Credit doesn't just affect your ability to borrow. It touches almost every part of your financial life. It influences your daily decisions, long-term goals, and in many ways, your overall financial freedom. Let's look at a few real-life examples of how credit plays a role in different areas of your life. When it comes to major financial milestones, credit is almost always part of the equation. When you buy a home, your credit score determines whether you'll be approved for a mortgage. And just as importantly, what interest rate you'll receive. A strong credit score can mean the difference between securing a lower rate that saves you thousands of dollars, or being offered higher rates that increase your long-term costs. The same idea applies when buying a car. Dealerships and auto lenders use your credit score to assess your risk level as a borrower. With good credit, you'll likely receive better terms, lower interest rates, and even qualify for 0% financing offers. With poor credit, however, you may face higher rates, larger down payments, or even loan denial. In both cases, your credit doesn't just influence whether you get approved. It determines how much you'll pay over the life of the loan. Credit extends far beyond big-ticket items. Even in your day-to-day life, credit quietly shapes the opportunities and costs you face. For example, some employers review credit history as part of the hiring process, especially for roles handling money or sensitive information. They see your credit behavior as a reflection of your responsibility and trustworthiness. Landlords also look at credit before approving rental applications. A strong credit report can make the difference between securing your ideal apartment or losing it to another applicant. Even insurance companies use credit-based scores in some states to calculate premiums. To them, maintaining strong credit signals lower risk, and that can translate into lower monthly costs. In essence, good credit acts as a trust signal. It shows others you can be counted on financially. That trust lowers your costs, widens your access to financial products, and opens more doors. For example, someone with a 780 credit score might qualify for a mortgage rate. That's 1 to 2% lower than someone with a 620 credit score. That difference may not sound large, but over the life of a 30-year mortgage, it could mean saving tens of thousands of dollars in interest. That's the real value of good credit. It doesn't just help you borrow, and it helps you save money and move through life with more financial flexibility. Credit touches nearly everything, from major life purchases to day-to-day transactions. It influences how much you pay, what opportunities are available to you, and how much freedom you have to pursue your goals. When you understand why credit matters, you begin to see it not as a burden, but as a strategic advantage, a tool that, when managed wisely, puts you in control of your personal and financial future. The better your credit, the more opportunities you have. That's why credit matters so much, because it's not just about borrowing money. It's about gaining the freedom to choose the life you want.